do it because I couldn't see your name.
All right.
Okay, so the topic of today is how to take profit when you're trading or um, investing, but mostly it's trading different types
Okay.
of assets, crypto or asset or stocks.
Mm-hmm.
It's my first live since Feb. I haven't been on TikTok for a few months now. I've been very busy, as I told you, separately offline.
Yeah.
And so I wanted to go back into TikTok now that things are settled, and I wanted to bring you on board as an expert investor, trader that I had the pleasure to meet on TikTok. You've been doing it for 20 years. I've been on it recently, and I did all the kind of mistakes that a new rookie trader does. And so I wanted to bring you on board so you can share with us your wisdom, your tips, your advices on how to do it the right way. Not necessarily the professional way, but how to do it the right way. And the
Sure.
biggest challenge that I personally face, my friends have faced, people I've seen as well face is the theme of the TikTok is how to take profit when things are going your way, things are up on the right.
Yeah.
And there's so much behind this theme that I think it's not gonna be enough for us to have one live on it because there's so much around human psychology, resisting greed, and putting all the emotions on the side, be very system oriented, having a
Yeah.
process, having system abide to it, and be very, very disciplined at it.
Mm.
And so I wanted to share with um, my followers on TikTok and whoever is listening your advices, your professional tips on how to get disciplined to take profits. I personally have seen my numbers go up on like on paper,
Yeah.
um, tens of thousands of dollars, and just I look at it and I'm happy and I'm excited about wow, look at my portfolio is growing,
Yeah.
and miss the boat. I miss taking profit because I think it's gonna keep going higher and higher and higher, all only to see it go down and it goes down. And I realize, okay, maybe if we keep it going up, it's gonna go up. Maybe if I wait, it's gonna keep going up, but it goes down. And
Yeah.
I wait, it keeps going down, and it goes up a bit. I'm happy. I say, okay, let me keep it going up, and then it reverses, and now it's a negative. And
Mm-hmm.
then you still wish it's gonna go up, and you still hope it's gonna go up, and this is where you start thinking about limiting your losses or not. So it's
Yeah.
much, much more difficult to take profits than people think. And I wanted you to help us share your input on how to do it. And whoever's listening, please feel free to ask questions. This is a rare opportunity to have a professional with us share his personal experience, professional experience working with a lot of clients and customers around the world.
Well, thank you very much.
So, Hassan, it's all yours right now. If you want to just introduce the topic, and just for the sake of time, it's going to be a 30-minute live.
Right. Okay. So you want to talk
Konstantinos.
about a system or when to take profit when you're trading and avoiding greed. And if it goes down, you're not going to be waiting for it to rebound and so on, and see all the profit that you saw on the screen deteriorate. I'll start with the very basics that seem to be lacking from most people I see who are trading. And the first one is that trade. They don't treat the trade as a trade. And what I mean by this, when we're talking about trading, not necessarily trading in financial markets, but trading commodities or trading even the product they're selling online. So when you enter into a trade like this,
Hmm.
you're buying inventory with the view that you're going to be selling it at a profit, right? So when you were doing your product that you were selling online, you knew your cost and you knew how much you were going to sell for.
Correct.
And at some point in time, you might have had discounts for certain types of clients and so on. But you always had a target price that you were going to aim for. Whatever the market for that gizmo you were selling is doing was irrelevant. You might have increased the price later on when you got the new inventory in, but you always set your price before you started that trade,
Mm-hmm.
right? You
Correct.
would never go and buy inventory without doing your due diligence and market research and so on, knowing exactly how much you were going to sell it for.
Mm-hmm.
And this is where most people get it wrong at the beginning. When they're looking at the stock market or crypto and so on, they just buy without thinking how much they're going to be selling it for and why they're going to be selling at that price as well. So this is the mindset that you need to have all the time when you're trading. You're trading anything, whether it's the financial markets or a physical product or selling your services, you're trading that specific item.
Mm-hmm.
So that's the
So
starting point.
what you're saying is,
Yeah,
when I'm choosing the asset, and I think let's talk
yeah,
about crypto just for the sake of simplification. When you're choosing the
okay,
crypto, the token that you want to trade, before you purchase it, you have a set target sale price. When it hits it, you have to sell. That's
absolutely,
how it,
yes,
okay.
yeah.
The
So
difficulty is,
so there
so
are
let's
ways.
say,
Sorry.
I'm gonna give a specific example. So let's say you're
Okay,
trading Link, okay, chain link,
okay,
and you enter at the price of 30 or $30,
mm-hmm.
and then your sale price is $33, a 10%.
Okay,
But then you see the trend, you do the technical analysis, it's seems to be exceeding the 33. So it hits 33. You don't have a sale order. Do you let it
right,
go up, or you just sell and be disciplined at it, even if you think that's going to hit 34, 35?
right. So there are several ways to do this. The first one is going to be okay. So in crypto, because it tends to really just rally massively, you might want to set several stops on the way. So
Okay.
the first one, maybe you have a target of 10%. You just take out part of the trade.
Mm.
Then at 20%, you take out part of the trade. Once it reaches a certain point, you have to set yourself a sort of a trailing stop. So the higher it gets, then it is moving. That stop is moving, and if it comes back down, you just hit your stop center.
Okay, so let me be
There is
specific here.
always,
Yeah, go ahead.
yeah,
Go
go
ahead.
on.
There's a lag, that's why it's a bit weird. If I say something, you keep saying something. Can I ask a question? So let's
Yeah.
say you have a stop order at $33. And let's say you want
Mm-hmm.
to exit with 25%. Okay. You
Right.
still have 75%.
Mm-hmm.
The next one is at $34. So at
Right.
maybe 11%, right?
Okay.
Then it not doesn't hit 34. It hits 33.5. What do you do in this case? Do you have a stop loss order, or
Right.
how do you manage this? Because you still have
Okay.
75% in it.
So what I personally do is that as soon as I hit my first target, I move all my stop losses to break even.
Mm.
This way, I have cash in my hand, and even if it comes down, I'm in the money. So that's that way I haven't lost anything. You might lose a little bit of opportunity. You haven't lost money, especially if you are taking credit. So if you're buying with margin, and that's really the danger there. So you always have to make sure that that stop first, the first take profit, you move all your stop losses to break even.
So if I enter at 30, the break even is 30,
Yeah,
correct? Okay.
Yeah. Now,
So
one of the things that tend to make people a little bit go off is when they see markets going up, they think that markets are never going to come back down, and there is huge FOMO. So they just enter when it's really massively high. And then all of a sudden, it all comes crashing down. And always think about it as if you're buying a house. Again, like if you're buying real estate, you're not waiting for the market to be at its peak before you buy. It doesn't make any sense.
mhm.
You wait for the market to come a little bit until you start buying your property. So patience and not doing anything is one of the things in trading. Just
Okay, so
sitting on the sidelines
it's so
and
much
watching,
harder. It's so much hard to
it is
execute,
really, really difficult, yes.
especially when you're a very short-term focus. And I'm focusing on trading. It could
Yes.
be day trading, week trading, maybe swing trading on a monthly basis, but I'm focusing more on the uh,
Especially
fast-paced
with
trading.
trading.
Yeah,
Especially with trading. With investment, I don't really care if, for example, Amazon today is at 3,400 or 3,000, because if I'm investing in Amazon for 20 years in advance. So,
right.
so in 20 years, that $400 is not going to make a big difference. It should be reaching 4,000, 5,000, whatever. So that $400, it doesn't really matter in investment.
Mhm.
But when you're trading, every penny matters. So you cannot just buy when you see the markets are massively high, because every penny is going to matter when you're trading. And this is a
So,
very difficult mindset to get for most people when they start trading, is that they see markets going up and they see this hype and they feel like they're missing out. And that's where the danger is.
let's say I have $1,000 and there's three crypto tokens I'm interested in,
Mhm. Yeah,
and I'm trading, right? Let's say I'm even trading on a daily basis or every 2 day.
yeah.
Do you recommend putting the $1,000 um, all in, or you keep some cash even if you have small amount of money to trade? Because I read your articles,
So
cash
you
is
broke
very
up a little
important for
bit, so
you.
I didn't hear the question.
So the question is, if you have $1,000,
Yeah.
it's not a big amount, but it's representative.
Hmm.
And I read your articles that you always need to have some cash on the side. So the thousand
Yeah.
dollars, do you all in trade it in crypto or any asset, or you keep some of it in cash just in case there's an opportunity you have missed?
Right. So the first thing you have to keep in mind is risk management. And when you're trading with an amount that's as low as $1,000, you can take a little bit of a higher risk than if you're trading with 100,000.
Hmm.
Meaning that a lot of books or you read, they would tell you to limit your each trade at 1 to 2% risk of the whole portfolio, which means that if your portfolio is $100,000, whatever your stop loss for the trade cannot be over $1,000, that loss, or $2,000 for 2%. Okay, so when you're trading with $1,000, that's very difficult because it limits you a little bit. So maybe you can have it a little bit higher, maybe
Okay.
10%, 15%, or even 20%, but not really higher than that, because then it would be very irresponsible to risk more than that. So that's the first thing you have to think about when you're taking a trade. Is not the full amount that you have in the portfolio, is how much you're risking per trade. So whether you're going in with the full $1,000 in the trade, or you're going in with only a half or a quarter, you always have to limit your risk to that percentage that you decide in advance.
Okay,
And do not
can I
change
probe on
that
this
as
more?
soon as you
Just
start trading. Yeah,
let me simplify it more. So let's say it's
yeah,
$10,000.
yeah,
You're saying, and it's 2% risk management.
yeah.
You're saying I should not lose more than 9,800, not more than
No,
$200,
200. Yes.
not more than $200. So this is the maximum I'm willing to lose. So the
Per
stop loss
trade.
would be at 9,800.
Per trade. Yes. So this way, like if you like that you have 50 trades in that portfolio.
Mm-hmm.
If you lose each and every trade 50 times, you still have 50 trades.
How
So
so?
you have to be really doing something majorly wrong to get 50 trades in a row losing.
Loss. Awesome. So what you're
Yeah.
saying, diversification is very important.
It's not just diversification. You can be focused on one asset that you're trading, but that risk has to be limited to that 2% or 5% or whatever it is that you're going to decide on. For example, when I was starting from scratch again, I was starting with only 500 sterling. Okay, let's say $500 for simplicity.
Mm-hmm.
Okay, I was willing to risk more with that $500 in order to make more gains just to grow the account quicker. But as soon as I reached $5,000, then it will be very irresponsible of me to risk more and then lose all the money that I made.
So
So
what you're saying,
in the beginning,
if I understood what,
I limited it to 20% per trade. So this way I have a full week of losses before I lose all my money.
I see, I understand.
And I would do one trade per day and that would be it. Right?
Hey
So
Pat,
if I
I am
make a
back.
loss, then yeah.
So the smaller the amount, the bigger the risk you're taking for the gain to be meaningful. That's what you're saying.
Yes. Yeah.
Okay. And when you're like, let's say you have the $500, the sterling, and you found an
Yeah.
asset, crypto or stock, doesn't matter. Do you go all
Mm.
in or you average it out, even if it's small?
It depends on the trade. If I'm doing a swing trade that will last several weeks, I might just take part and then average. But if it's a day trade, I would just go in, do the trade and out, and that's it.
So the shorter the period of time, the bigger the amount you're willing to put in at one point, as opposed to averaging
Not
out.
really, no.
Okay.
Okay, so if for example I take that $500 and I'm dividing it into 500s, okay, because I'm trading with margin in order to get more profit. So I'm risking 100% of each $100 that I'm investing or trading, sorry. Okay, so each trade is going to be $100.
Mm-hmm.
So if I'm taking a longer term swing trade, like it's something that is going to last several months, I might go in with 20, then another 20, then another 20. It could be that I go in with just the $20 and then it shoots up and I don't get in with the rest of the amount. But I have dedicated $100 to this trade.
But what if
If
it's
it is a
shorter? What
day
if it's
trade,
day?
I would just go in with the $100 and that's it.
What if the window is not months or weeks? Like most people are,
Yeah.
especially in the crypto world, because of the volatility, they have much shorter period of time, like days even.
Yeah.
Do you even average it out when you have a small amount, or you just go all in and then based on the DA, you know
Yes.
when to exit?
With something like crypto, I always average because it is very volatile. So you know it's going to come down and it's going to go up again and so on. So it would be unwise to just go all in one go and that's it. because of that volatility, you know that it's going to be to have a pullback at some point. And if it doesn't, then you're in it already and you're fine.
We have a question from Pat. When does he take profit when trading options? His new rule is 40 to 50% gain, and then he takes profit. So when do
Right.
you
It
take
depends
profit
on
when
the
you're trading
option.
options yourself?
Yeah. So it depends on the option. So some options I would take with the strike price is it only gives me maybe 10, 15, 20%. And it depends on how far away in the future it is. Whether it's I usually take spreads. So whether it's a debit or credit spread. So if it's a credit, I just let it expire and that's it. But if it is a massive thing, like I'm taking maybe a leap or something, and then it has like 200-300%, I might take profit at 20 or 30% only.
Okay. Does that
Because
answer your
I have
question,
seen it
Pat?
happen many times before that this like 100-200%, I wait for it, and then I lose the money at the end.
I see. Okay. So the theme of this live is taking profits. And
Yeah.
many people are not necessarily dependent on the profit to cover their expenses, but would love to.
Yeah.
And the idea
Yeah.
is you have certain expenses, amount of expenses per month that you need to cover
Mm-hmm.
in your life, irrespective of trading. So let's say this amount is $5,000 of expenses.
Okay.
What's your
Mm-hmm.
strategy to rely on trading as a mechanics to cover your expenses? Because you need to take profit to spend on expenses, given there's taxes, given that there's an amount that you're
Yeah.
invested, given the market is volatile. How do you do it? And it's greed. I mean, you see it hitting
Right.
5K, but then you let it go to 7K, or you just be disciplined. 5K, you take it out, and then you go
Discipline.
back to the base.
The simple answer is discipline, but it's a very tricky one because
Yeah.
it all depends on how much money you're starting with. Because that 5,000 could be a tiny amount, or it could be a massive amount from the initial amount you're starting with. If you're starting with $1 million, that 5,000 is not much. But if you're starting with 1,000, then it might be unrealistic.
So what is a fair amount to consider when you want to aim for 5K? Is it 100K? Like average based on the gains that you've seen?
Um,
I know it's a tricky question. It's hard.
that's very difficult, and yeah, because
Let's put it
it
differently. Let's put
okay.
it differently. If you had 20K that you're playing with for
Mhm.
trading,
I wouldn't be playing with 20K. Sorry, I would
what's
either
that?
be investing or trading 20K, not playing with them.
Yeah, so I'm sorry about the words. I need to be more
No, it's okay.
aware of the words that you. Let's say you have $20,000 that you want to trade.
Yeah.
How do you do it in terms of expectations of profits on a monthly basis? You have 20K. Do you put it all in a month, or you keep some cash out, which reduces your base trading amount, or you put in the 20K, you hit 20% gain, you take the 4K out, and you're back to 20K.
Right. So that's definitely one way of doing it, and it's the relatively safe way of doing that. You have your target. As soon as you hit target, you take that money out and then start over again. So this way, if you're losing, you already have your cash on the side, and you're not risking that anymore. But to say that you're going to be consistently making 20% a month, that's very unrealistic.
So
It's
what do you do? You have 20K to trade. What do you do in this case? What kind of expectations do you set? How do you manage your trading frequency How do you do it basically?
Right. With $20,000, I would have a portfolio. I would start by creating a portfolio. And it is actually something that I have done, like what people are copying me on eToro. That's the one I've done. Right? When you have an amount like this, it's really irresponsible to just put it all in one or two trades and then lose it all. So what I do with $20,000 starts off by dividing it into little chunks. So I have my safe part, I have my more risky investments, and then I have my trading portion of that portfolio. So
But some of it
the
you're
trading
saying it's
portion is
longer
going to
term
be just
investment.
part of the whole. Pardon?
You said some of the 20K is going to be long-term investment, right?
Yes, because this is what's going to save you when you're going to be losing money trading, because you are going to make losses. It's inevitable.
But let's
You
assume the
have to
20K,
accept that you're
all of
going
it
to
is
make
for
losses.
trading. But let's assume the 20K, all of it is for trading.
Okay, so you have other money to balance that risk then.
You should. Let's assume no,
Okay.
but let's say yes.
Okay. Right. So the 20,000 again, like I would have my 2% risk per trade. And
2%?
when you trade, it is very difficult to have too many open trades at the same time. So one way of doing it is maybe you can scalp, for example, and with scalping you can have very small risk, and as soon as it hits the profit, you're out of the trade. But then you really have to be in front of the screen and know exactly what you're doing.
Mm-hmm.
It takes a lot of time and effort and energy, and psychologically as well. It takes its toll on your head when you're scalping. So it is not really something that you can do long term, but you could do like day trading is a little bit more relaxed, or swing trading, but always do not risk more than that 2%. So you
The
have a
challenge of the
maximum.
2%, the
Yeah,
challenge of the 2% in the market where volatility is high in the crypto, where on a normal day it goes up 3, 4, 5% and goes down 3, 4, 5%. When
yeah.
you have these stop losses, you're gonna lose the money because it's gonna go down for sure, more than
Well,
2%.
this means that you're no, actually not. This means that your trade is going to be a smaller trade.
The amount,
The amount that you're starting with, because you can be trading with $100 and your stop loss, if you're taking 20 times, for instance, leverage, that amount is going to be much bigger. You can be losing more than what you're putting in, but
mm-hmm.
that loss has to be no more than 2 to 3% of your whole portfolio, and that's where you have to keep in your mind the risk that you're taking is not the size of the trade. It's the size that you're going to be losing if you make a loss in that trade.
So the $20,000, then you have to split it across different assets.
You don't have to, but you just risk that no more than 2 to 3% of that $20,000.
So you're not
If you
willing to
really
lose more than
are like,
$400.
if you really want to take big risk, maybe 5%. Then you would be risking $1,000. That trade could be only for $500, but you're risking 1,000. So then that movement in crypto is not really something that is going to hit your stop loss very, very easily.
Yeah, and I've seen it hitting the orders very easily because let's say you go in $2,000 in a token and you have a stop loss at 1,600.
Mm-hmm.
That's 2%, correct? You can
Okay.
easily hit it. Do you
Not if the trade is smaller. Not if you're starting with a smaller amount.
$2,000?
1,600 is going to be much lower to hit.
Now you have $2,000 that you're using to trade.
No, don't think about it that way.
Okay.
Think how much you're going to lose, not how much you're going to put into the trade.
How much you're willing to lose.
Yes.
Right.
So that
So
2
I'm
to
willing to lose
3%.
$400, let's say.
Okay, so let's say $400.
Mm-hmm.
Okay, you can start the trade with 1,000, and that $400 is going to be 40% of the trade, or you can start with $400 and it's 100% of the trade, or you can start with $200 and that's 200% of the trade. You see what I mean?
So you start the opposite way.
It's the loss that you're going to be making. No. So if you're starting with $200 and your stop loss and leverage trade, you can lose more than what you put in, right?
Yeah.
So $400 is 200% of the initial amount that you're putting, the margin that you're putting in. It's very different, obviously. That stop loss is going to be much, much lower if you're buying. It's much lower than if you're starting the trade with $1,000, because then it will be very close to that entry price.
Yeah. So some of the platforms out there don't offer stop losses, or they just offer you to enter and get out, or options when it comes to stocks, like Robinhood, for example.
Right. Mm-hmm.
Do you advise not using such platforms at all because you cannot control the losses?
If you don't have the discipline to exit, so you can obviously set yourself alert, yeah. But if you do not have the discipline to exit and you have to set the stop loss, find another platform that you can set it in.
Okay. So it's
going back all to about consistency. There's nothing else you can do other than be consistent. If you're inconsistent with it, you're going to lose the money. It's inevitable.
It's always so much easier to say than to actually execute.
It is.
Especially when things are up on the right. Like everything is green. Greed kicks in and you want to make more profit even.
But remember the beginning. You do not buy inventory of a product without knowing how much you're going to be selling it for. Otherwise, you're just gambling that money. You might as well just go to the casino, put all your money on 15 and on the roulette, and that's it. You know, it's completely random. But if you're trading properly, you have to have set goals. You cannot deviate from them, and the goals have to be the take profit as well as the stop loss.
That makes a lot of sense. Now take the opposite. You did not put a stop loss and the price went down. Do you let it rectify and then go back up at some point, or you limit your losses by exiting and accepting a certain loss?
If I didn't put a stop loss, it's either I missed it or someone else did it for me. I would never ever enter into a trade without knowing where my stop loss is. That just doesn't happen. It is irresponsible to do such a thing.
But isn't the risk of losing money higher in this case?
Knowing what take profit level you're going to take, you have to set yourself a stop loss. You cannot, it's a trade, it is not an investment. If it's an investment, it's a completely different mindset. If it's a trade, you have to know when to exit and cut your losses early.
And you cannot switch your mind saying that I'm negative. If I exit, I'm going to lose. Let me just let it sit for a few weeks or until it goes back to where it was.
I've seen many accounts blown up because of that.
It's a bad thing.
Personally, I would rather just take my money at a loss and then start over from scratch, rather
I see.
than just waiting for it and wishing, because that's wishful thinking. You do not have anything solid that you're building on, unless you did another analysis and you saw something there. But then set yourself a stop loss at that point.
Yeah.
And if it starts going down, just exit and do not wait for it to rebound again.
So I think we have 5 more minutes. Is there any questions from
Okay.
people watching? Anything they'd like to know from Hassan?
Let me have
I'm just asking him questions. There's nothing I could help you with except ask the questions that you're asking. Joseph is asking 50% long term. I don't know what he means. If it was for Pat or for was us. How much of the trading amount that you're using to get the profits to cover your expenses, how much of it usually is as part of the whole portfolio that you have in percentage?
hmm, that one, because it depends on when you ask me. Like if you asked me last year, it was very different from when it is now, and it will be different in a couple of months. So that's
I
it depends
see.
on how much money you're starting with and how much money you
Yeah,
need
of
every month.
course.
It's
Yeah, so it's always hard to set a certain goal and you hit it. It's very hard because so much of
yeah,
it is unpredictable. And there's this balance between am I betting or am I actually being disciplined?
yeah.
Is this gamble or is this more something you control?
Okay. So when you're trading a product like the demo you were selling, okay, you do your market analysis. You know who's going to be buying from you. You know the demand for it. You know that the suppliers, the competition, and so on. And this is the mindset that you always have to have in mind when you're going trading in financial markets. Technical analysis is only a part of it because it gives you the psychology of the market. Like the support and resistance are nothing but the psychological levels at which people are willing to pay money or take money for that specific asset.
Correct.
So that's the first part. The technical analysis is only a small part of it, but you have to start from a fundamental basis. Like for example, you are not going to be very successful if you're always trying to trade in a rubbish product. Okay, so if you're trading in a pen that's always going to be only writing a couple of pages and finishing, if you know that this product is rubbish, then you're dishonest because you're buying it and you're willing to sell it at a higher price for someone. You're cheating them because you know that this is a rubbish product. So
So
there is
always pick the right
an
product that you're
honest
trading.
responsibility that you have to start from. That's a base. So analyzing the asset itself and how good it is a starting point. The second point is that you have to have a catalyst that you know is going to be driving that price up. If you're going long, for example, in gold, you have some sort of catalyst in the future that you know that this is your target. So it's not just a price target, it's also a time target. So you're always knowing more or less when the trade is going to end and not just how much you're going to be aiming for. Because the catalyst might come and go, and then you don't hit your target, and then what happens next? Then you have to exit the trade. So that catalyst could be, it has to be like for stocks, it could be earnings releases, it could be an AGM, it could be an event like Apple releasing their next iPhone or iPad or whatever. In like with forex, with this one, there are a lot of economic events that happen every day, or political events like the elections or whatever, and then you analyze it in that way and say, okay, this will be my target to aim for because I expect the price to go up or down at that point.
Right. So
So then
in
you
one
have
minute,
your target price and target. Sorry, yeah,
just for the sake of time, because we need to end in 1 minute, just
sure.
quickly, very
Okay,
quickly. Are you
sure.
expecting the market crash in the US? Or what's your outlook on the market in Q3 and Q4? Just quickly, though. I know this is a very lengthy topic.
God, I can spend days talking about this.
I know.
Not at the moment, no.
No market crash?
Inflation is going to be a major issue. There are going to be supply bottlenecks that I can see. There is a problem at the moment with companies trying to hire, but they are not finding the skills. And and that's like the job openings were about 1 million, but only like there is still about 6% unemployment in the US. So there is a discrepancy of skills to the job market. So that's still an issue that's going on. It is going to be choppy, but a huge crash, I don't. It's unlikely at the moment.
Okay. Yeah, I know it's a very lengthy topic. We might spend more time next time on the live to discuss your opinions
Where
about
did you
it and
go?
your thoughts about the market. Thank you so much,
Okay,
Hassan. This
you're
is
more
what,
than
40
welcome.
minutes already? I'm sure we're gonna have more conversation like this over live, but I wanted to pick your brains around taking profits, which is a topic that also never ends. Thank you everyone for
Yeah,
joining, and looking forward to seeing you in the next live. Thank you. Bye
thank you
bye,
so
guys.
much.
Bye, Hassan. Thank you.
Yeah, thank you. All right,
Bye bye.
bye.